This is the first lesson in our 4-part series to help you learn more about filing your taxes and all the ways to maximize your tax refund this year. This series was made possible through the sponsorship of North Carolina Asian Americans Together, or NCAT. So a big thank you to them as we kick off the series. Before we get right into it, let's go over a few housekeeping rules, and I'll also tell you a little bit more about myself too. First of all, I ask that everyone please stay muted during this presentation. If you have any questions, please feel free to use the raise hand functions under reactions or type your questions into chat. Also, any resources that I use or reference in this lesson will be available on the Taxes 101 Resources Google Doc. I think somebody will drop that in the chat, the link to that in the chat right now. If you want to go ahead and open that up and take a look, this document will be updated as we move through our series. So for now, you'll only see some general resources and the resources I used in this first lesson. I highly recommend saving this link so that you can reference it later when we move through the series as you're going through your tax filing process and as I update it. Also, this series will be recorded and later uploaded to the NCAT website and the NCAT YouTube page. So no worries if you can't make it to a session or if you can't stay for the entire thing, you will definitely be able to view a recording of it later for anything you missed.
And one quick note on that as well, we are only recording Ellen and the slides, so no need to be shy. We will not be posting you anywhere without your consent. Even if you go off of mute to ask a question, we'll double check with you if that's okay for us to post. And if it's not, we'll just cut that part out.
Thank you, Fian. All right, so moving along, a little bit more about me. So my name is Ellen Zhang, and I am from Charlotte, North Carolina. I am also currently a sophomore at Duke University studying economics and public policy, and that is where I am located at right now. So now you might be wondering, what is this young college student doing here teaching me about my taxes? She has probably never done her taxes before and never done her own taxes before. And you'd be right. However, I have been doing taxes for many years now. I first became involved in taxes my sophomore year of high school when my mom was like, hey, come with me to this tax training event. This would be super useful to you in the future. And boy, was she right, but probably not for the reason she expected. So the tax training event I went to in high school was for a program called VITA, or the Volunteer Income Tax Assistance Program, which is a national program that helps low-income households file their taxes every year. I have been volunteering in VITA for over 5 years now, and I've done hundreds of tax returns for people in my community, not because taxes are fun. Taxes are the exact opposite of fun, but because I really love helping others, which is why I'm here today and holding this tax literacy series so that I can hopefully help you learn more about filing taxes and give you advice on how to become more tax smart so that you can maximize your tax refunds every year. Now, for a quick overview on what the series is going to look like, again, this is a 4-part series that is held every Saturday from 1 to 2 p.m. And each session will be covering a different topic as we move through a basic return. So today in our first lesson, we're going to be going over introductions and personal filing information, such as what is a 1040 and how do I figure out my filing status and dependency status. And probably the most important thing that I'll be covering today towards the end of this lesson is, do I need to file a tax return this year? And if I am not required to file a tax return, should I still file? We'll talk about some of those reasons later on. So please stay tuned until the end to learn more about that. And in the next session, we'll be covering some reporting income and some adjustments to income on January 29th. This will include some topics such as what is considered taxable income and what is non-taxable income. In our third session, we'll be covering a bunch of credits and deductions, and I'll be highlighting a few key ones such as the child tax credit and some secondary education credits. I'll also be talking about how to figure out if you're eligible for those credits or not, and what forms you might have to provide on your tax return to prove that. So definitely look out for that lesson. I think that is a really important one. And finally, lesson 4, we're just going to be wrapping up this series by going over a few more credits and deductions that I didn't get to in the last lesson, including the economic stimulus payments. I'll also be discussing a few more less common filing scenarios, such as what if I worked in a different state than the one I lived in? Or what if I am filing a tax return this year and I can be claimed as a dependent on someone else's return? How will that affect my own tax return? So that's what we'll be doing in our final lesson. And I'll also be wrapping up the entire series just by sharing a few more resources that you might find handy. So before we get started, does anyone have any questions for me or about the series? If not, we can go ahead and get started on the material for today. So starting off with your classic 1044. So what is a 1040? A 1040 is the most common tax form used for filing your federal income tax return. There are some variations of the 1040, such as the 1040EZ and the 1040A, but those are irrelevant for most people who need a file. So in this series, we'll be focusing solely on your classic 1040. If you're interested in learning more about the other types of 1040s, you can find the link to those in the resources Google Docs that is linked in the chat. So I'm gonna stop sharing my presentation slides real quick and share this page. Oh. It's just gonna load a little bit. So this is the Taxes 101 resource Google Doc that I was mentioning earlier. It has all the good resources in here. I highly recommend navigating through it by using the table of contents on the side, where you can just click to anything you want to see, such as, let's see, dependents, and it'll jump you straight to that. So for now, let's go ahead and look at a 1040. So this is a nice 1040 or 2020 tax year that I've broken down into different filing status. Actually, give me one moment. I do not think this is the correct one. I think the last one was for the tax year 2020. This should be the correct one for tax year 2021. There we go. Okay, so let's look through just a few of the sections of a 1040. I made this really nice visualizer so that when you're going through your own tax returns, you can kind of figure out where you can find each section. So starting from the top, the first thing you'll see is your filing status, where you'll check one out of the 5 filing status here. Then you'll have some basic information such as your name and social security number, your spouse's name and social security number if that applies, and your address. Moving on, we have the standard deduction section, the dependent section, and then after all of this like basic information stuff, we get into the actual numbers of your tax return, starting with all of your income, and then adjustments. So keep in mind that a lot of these lines in a 1040 actually come from separate schedules and forms, such as line 10 here. We see it comes from Schedule 1, which if I have it pulled up, let's see. Yeah, here's a Schedule 1. So it's like a whole separate form that you would attach to your 1040, which is why even though the 1040 itself is only 2 pages, a lot of the times when you're filing your taxes, your tax return ends up being like 10, 20 pages long because of all the separate forms and schedules that you have to attach to it. So moving on, we have the deduction section, some additional taxes, non-refundable credits, some withholdings and payments, other refundable credits and payments, and that would be the end of your formal tax return. At the end here, you'll see like if you are owed a refund this year because you overpaid taxes, you'll be able to find that amount on line 34. Or if you owe taxes this year, you'll be able to find that amount on line 37. The rest is mostly just logistical things, such as if you want to designate a third party, or if you use a paid preparer, and of course, your own signature when you're completely done with your tax return and about to send it off to the IRS. So this is just a really brief overview of a 1040. We'll be going through each of these parts in detail as we move through this series. I just think this is a really helpful resource for visualizing a 1040. And if while you are filing, you want to look for like a specific amount, such as I don't know, how much in wages did I get this year? You'll be able to find that in the different sections that I've outlined here. So any questions before we move on to filing status? All right, if not, when we go back to the top of our 1040 here, let's start working our way down. So the first item on your 1040, as I mentioned earlier, is filing status. You can see that there are 5 different types. We have single, married filing jointly, married filing separately, head of household, and qualifying widow or widower. So let's go back to my presentation slides. Filing status. So out of these 5 filing status, how do I know what my filing status is? Because people may fall under more than one filing status. So how do I figure out what my filing status is and which one is the most advantageous to me? Let's look at a really handy flow chart that helps us outline this process, not this one. Oops. One moment here. There we go. This really nice flow chart that helps us determine what our filing status is. So before we get started, you'll see here that married filing jointly and married filing separately are in the same box because if you are married, most of the time you will be filing as married filing jointly. You can choose to file as married filing separately though, but this married filing separately is objectively the least advantageous filing status out there. In fact, when we get to the credits and deduction sections, you will see that some credits even specify that you cannot claim this credit if your filing status is married filing separately. However, there are some people who may choose to file separately. So we can see that both of the options are here in the same box. You can choose in between the two if you meet the requirements for them. So let's go through each of these paths and we can see how we get to all the different filing statuses. So starting at top left here, were you married on the last day of the year? So I'll do this for me first. I was not married on the last day of the year. So that would be a no. We'd go down to the next box. Did your spouse die during the year? I've not married before in my life. So that would be a no. I do not have a spouse. Moving on, do all of the following apply to you? Your spouse died in 2018 or 2019, and you did not remarry before the end of 2020. That does not apply to me. I've never married before. Next, in the year of your spouse's death, were you entitled to file a joint return? Again, I do not have a spouse, never had a spouse. That does not apply to me. You paid more than half the cost of keeping up your home for the required period of time. This also does not apply to me because I am considered a dependent and living with my parents, so that's a no. Your son or daughter lived in your home all year and was a dependent or what qualifies your dependent for other reasons. That'd be a no. I do not have any children. So none of this applies to me. But remember, all of this must apply for you to say yes. If even one of these bullet points is a no for you, you just go ahead and move on to the no box down here, where it says, do both of the following apply? Yes or no, you paid more than half the cost of keeping up your home. Again, that was a no for me. And you have a qualified person who lived with you in your home for more than half the year. I do not have a qualifying person. A qualifying person in this sense is anyone who you can claim as a dependent, which we'll be talking about a little bit later today, but no, none of these apply to me. So I would be filing as single. Let's go back to the top here again and go through the flow chart again. So were you married on the last day of the year? No. Did your spouse die during the year? No. Let's say that this first bullet point here does apply to us. Your spouse died in 2018 or 2019, and you did not remarry. In the year of their death, you are entitled to file a joint return. You paid more than half the cost of keeping up your home. Let's say all these first three do apply to you. Let's talk about the last bullet point. This one might be a little bit trickier. Your son or daughter or stepchild lived in your home all year and was your dependent, except for a few certain tests that they might not pass. But this part right here gets a lot of people lived in your home all year. We can see this little superscript here, 3. If we go down to the footnotes of this page, we can see that there are some special rules for claiming people for head of household. We can see that there are, where is it? There are some rules to people who have lived in your home all year. There are some exceptions to that, which we'll see in the footnotes here. There are exceptions for temporary absences of down here in 6. This also applies to anyone who's been living in your household. For example, college students who've been living on campus all semester, even though they haven't been living technically in your home for the majority of the year, they would still be considered your dependent because they were just temporarily absent from their main residence by living on campus. So that's a little exception there to the home all year rule. If you're a college student living on campus, that does not necessarily apply to you because that is a temporary absence. That also includes temporary absences because you were in jail or you were just on business trips. So yes, let's say that all of these apply to you then. If you say yes to all of those, you'd be considered a qualified widower. Going back to the beginning here, let's say that you were married. Let's go down the yes path. So you were married on the last day of the year. We would go down yes. Did you and your spouse live apart all of the last 6 months of the year? If you did not live apart for the majority of the year, you would say no, and you would be either married filing jointly or married filing separately, depending on your choice. But let's say that you and your spouse lived separately for the majority of the year. You could say yes to this box. And then down here, we see, do all of the following apply? You file a separate return from your spouse. You paid more than half the cost of keeping up your home. Your home is the main home for a child or basically a qualified dependent, which is these two combined. Your home is the main home for a qualifying dependent. So let's say that one of these do not apply. Then you would say no, and you would be back to married filing jointly or married filing separately. But if all 4 of these apply, you could say yes and file as head of household. We'll see here that the other way to file head of household is from a different path here. you were not married on the last day of the year, your spouse did not die during the year. All four of these apply to you, and both these apply to you as well. You paid more than half the cost of keeping up your home, and you have a qualifying person, otherwise known as a qualified dependent, who lived with you in your home for more than half the year, again, with the exceptions of temporary absences. That will also allow you to file as head of household. So this can be a kind of confusing flow chart. I highly recommend just going through them and just thinking really carefully about if each of these apply to you as you move through the chart. I'm going to stop sharing this screen real quick, and let's actually do a few practice questions for filing status. So I highly recommend going to the Google Docs and pulling up the flow chart that I had showed earlier on screen to help you go through these questions. But we'll see two scenarios here that we're going to work on. So the first one, we have Becca. Let's see here. Becca and her husband divorced in March 2021. Becca now lives alone with her 12-year-old daughter, Mary. Mary had been living with her grandmother for the first 8 months of 2021, but moved to live with Becca again at the end of 2021. Becca also paid more than half the cost of keeping up her home for the required period of time. So what is Becca's filing status? Then we have scenario 2. Fred lives alone with his 2 children, Emma and Eddie. Fred is married, but his spouse, Kelly, moved out of their family home in February of 2021, and she's been living separately since. Kelly is filing as married separately, and Fred paid more than half the cost of keeping up his home for the required period of time. Both Emma and Eddie are dependents of Fred. So what is Fred's filing status? I'll give you guys a few minutes to work through this on your own, and we'll come back together and go over these questions. Again, highly recommend pulling up the filing status flow chart to work through this. So I'll just give you guys a few minutes now to work on that. All right, I hope everyone had the chance to at least try both of these scenarios. We're going to start going over both of them now. So let me change my screen to the flow chart. If you guys want to take a screenshot of this page just for the questions, or you can find this entire PowerPoint presentation slide on the Google Docs resources page if you want to refer back to these scenarios. So let me share the filing status flowchart again. And let's start going over the first scenario with Becca. So again, starting from the top left here, Becca and her husband divorced in March of 2021. So they were not married on the last date of the year. That would be a no. You can go down to the next box. Did Becca's spouse die during the year? Her spouse did not die during the year. So we have to see if all of the following apply to her. Did her spouse die in 2018 or 2019? Well, this is super easy. The first one already does not apply because her spouse is still alive. So we don't even need to check the next three, but just to be comprehensive, let's look at them too. In the year of death, we're entitled to file a joint return with their spouse. Again, her spouse is still alive. Did Becca pay more than half the cost of keeping up her home? Yes, she did. Does she have a son or a daughter who lived in her home all year? Now, this is a tricky question, and we're going to save this one for the next box as we go down. So again, we said because her spouse is still alive, all of these do not apply to her. So that's a no. We can move down to this box here. So do both of the following apply to Becca? She paid more than half the cost of keeping up her home. This is true. We said in the information that she paid more than half the cost of keeping up her home for the required period of time. And then does she have a qualifying person or basically a dependent who lived with her for more than half of the year. So actually for this bullet point here, that would be a no for Becca. Her daughter, Mary, lived with her grandmother for 8 months out of the year. So Mary did not live with Becca for more than half of the year. And that would not be considered a temporary absence either, since she was living full-time in her grandmother's house. So for the sake of Becca, Becca's filing status is single. Moving on to the next scenario, Fred, we can go back to the start of the flow chart. Was Fred married on the last day of the year? Yes, he was. He was married, so yes. Did Fred and his spouse live apart for all of the last 6 months of the year? They indeed did live apart. We can see in our scenario that even though Fred is married to Kelly, Kelly moved out of their family home in February of 2021. So she has been living separately for almost 10 months out of the year. So that would be a yes. Do all the following apply, Fred? You file a separate return from your spouse. That does apply. We know from the scenario that Kelly is planning on filing married filing separately. Does Fred pay more than half the cost of keeping up his home? Yes. It says here that Fred paid more than half the cost of keeping up his home for the required period of time. Is Fred's home the main home for his child, stepchild, foster child for more than half the year? That is also a yes. Fred's two children, Emma and Eddie, are both dependents of Fred. So the fourth one here, they're both dependents. He can claim both of them as dependents, and they lived with him for the entire year. So all of these apply to him. We can see that this means he can file head of household. Now this one is a little tricky because Fred is technically able to file as either head of household or married filing separately. Obviously, head of household is a lot more advantageous to him, but sometimes people are not aware of this filing status, so they may mistakenly file as married filing separately, and that is not legally wrong to file as married filing separately. It's just not the most advantageous filing status. Okay, so let me go back to our slides. You can see here, yes, Becca's filing status was single, and for Fred, he can file as either married filing separately or head of household, but filing as head of household is the more advantageous filing status for him. I'm gonna claim it. Dependents are really useful to claim on your tax return because they help significantly lower the amount of tax you have to pay every year. So, but the most important thing is to figure out who you can claim as a dependent. So let me share my screen again and we can move to the dependent chart. The dependent chart here, again, available in the resources Google Doc. So there are two types of dependents. You either have a qualifying child or a qualifying relative. Now, the biggest difference between qualifying child and qualifying relative is this first box here. For a qualifying child, they must be your child in any way, so son, daughter, stepchild, foster child, or your sibling, brother, sister, half brother, half sister, stepbrother, stepsister, and any descendant of them. So your granddaughter or your niece. We can see here for qualifying relatives, it doesn't really matter who your qualifying relative is in relationship to you, as long as they meet certain other tests down here. So while qualifying child has to be directly related to you as like your child or your sibling or any descendants of them, anybody can be your qualifying relative as long as they meet certain tests. So let's go through some of these tests. But before that, going over a few overall rules here at the beginning, this bullet points here. Dependents can only be claimed once per tax return. So if you and your spouse are doing married filing separately, only one of you can claim your son or your daughter, for example, if they are your dependent. You cannot claim a person as a dependent unless they are a United States citizen, resident alien, national, or resident of Canada and Mexico. This is rather interesting one for any international people here. Okay, so moving on to the qualifying child. This is probably the most common form of a dependent. So let's run through the tests to be a qualifying child. We already done the first box. They must be related to you as your child or your sibling or any descendant of them in some way. Adopted children counts as your child in this case. And this child must be either under the age of 19, under the age of 24 and a full-time student, or any age if they are permanently and totally disabled. You can search up the exact instructions for permanently and totally disabled people on the IRS website if you so choose. The third thing is the child must have lived with you for more than half the year. Again, we see the footnote here, number 2, for certain exceptions of temporary absences, including children of divorced or separated parents who live apart, any kidnapped children, or if you are a college student living on campus, that would be considered a temporary absence. Then we move on to number 4. This child must not have provided more than half of his or her own support for the year, meaning that you cover more than half of their living expenses in any way. Number 5, the child isn't filing a joint return for the year. So if the specific child is married, they cannot be filing a joint return if you want to claim them as a dependent. And then lastly, this is for any children that can be claimed by more than one person. You would have to see the qualifying child of more than one person chart, which is again linked in the Google Docs resources page. This is a rather uncommon one, so I will not be talking about it in too much detail. But overall, to be your qualifying child and therefore dependent, they must be related to you as your child or your sibling or any descendant of them. They must be of certain age, as we saw here. They must have lived with you for more than half of the year with certain exceptions for temporary absences, and they must not have provided more than half of their own support. If these are the main rules for claiming dependents, if most of these apply, then most likely they are a qualifying child to you and you can claim them as a dependent. Moving on to qualifying relative. Qualifying relatives are a lot more broad. As we can see here, as they can be your qualifying relative if no one else can claim them as a dependent. Basically what the first 2 sentences here say. And then number 2, the person must be related to you in one of the ways listed under relatives. So basically any of these that apply from box 1 of qualifying child or any other relatives such as your father, your mother, your second removed cousin, pretty much anyone who is related to you in some way, or they can be someone who had lived with you as a member of your household all year round. So this can be like a complete stranger, somebody that you met in town or that you're rooming with, as long as your relationship does not violate some local laws. Moving on though, this This is where we differ a little from the qualifying child's test. For qualifying relatives, they must also meet a support test, meaning that this person who you're trying to claim as a qualifying relative cannot have more than $4,300 of gross income throughout the year. If they made more than $4,300 in gross income, you are not allowed to claim them as a qualifying relative and dependent. Then lastly, you must also provide more than half of this person's total support for the year, which is the same as the fourth box here under qualifying child. But this income test right here is the big one that usually decides whether or not you can claim someone as a qualifying relative, whether or not they made more than $4,300 throughout the year. And there's also a separate section down here, including Social Security benefits, that I will not be talking about in too much detail. You can read more about that later on your own if you so choose. But for now, let's go ahead and do a dependent practice problem. So here is a practice question scenario. We have Henry and Karen here, who are married and filing a joint return this year. Their daughter, Lisa, is 20 years old and a full-time college student. Lisa is single and has lived on campus for 9 months during the year, and Lisa did not provide more than half of her own support. So can Henry and Karen claim Lisa as their dependent on their return this year? I'll give you guys a few minutes to work on that. Again, that chart that I was looking at earlier is on the Google Docs resources under Lesson 1, Independence. I would highly recommend using that to try and work through this question. Alrighty, hopefully you guys had a chance to try out that question. No worries if you didn't get it. We'll work through it together right now. So feel free to take a picture of this screen so that you have the scenario, because I'm gonna go ahead and start screen sharing the dependence chart again. Here we go. Alrighty, so Henry and Karen and their daughter, Lisa. So since Lisa is directly related to Henry and Karen as their daughter, the first test we should probably do is the qualifying child. I should probably also note that a qualifying child is usually more advantageous than a qualifying relative, because qualifying child can be used for other tax credits that we'll be learning a bit more about in lesson 3. So since Lisa is the daughter of Henry and Karen, she meets the first test. She is their daughter. Then the second test, Lisa is not under the age of 19. So this first part, section A, does not apply to Lisa. However, part B does. She is under the age of 24 and a full-time student. So box 2 is met, that's a yes. Box 3, Lisa must have lived with Henry and Karen for more than half of the year. We know that Lisa has lived on campus for 9 months, so she has not been home for more than half the year. But again, there are exceptions to temporary absences, including college students living on campus. So Lisa meets the exception for this. She is able to claim this exception. So box 3 still applies to Lisa. She has lived with Henry and Karen for more than half the year, with exceptions of temporary absences. Then box 4, Lisa must not have provided more than half of her own support for the year. We know from the scenario that she did not provide more than half of her own support, so this box is also true. Lisa is not filing a joint return this year. This is true. Lisa is single. She is not filing as married, filing jointly. And then box 6 does not apply to Lisa because only Henry and Karen can claim Lisa as a dependent, and they are both filing as married, filing jointly. So there would be no problems of Lisa meeting the requirements for more than one person who is filing. So this means that Lisa can be claimed as Henry and Karen's dependent because she is a qualifying child. Does anyone have any questions about that? All right. If not, let's get into a really important part of today's lesson. Who needs to file, who should file, and some things that are really important to filing a tax return. So before we get into those questions, I just need to talk about the single most important thing that you must have if you want to file a US tax return this year. You must have either a social security number or an ITIN. And an ITIN is an individual taxpayer identification number that is issued by the IRS. So for any international people here, if you're looking to file a United States federal tax return this year, you can either apply for a social security number if you meet certain requirements for it. Again, I have the resources to that linked in the docs if you want to read more about that. Or you must have this ITIN, which is a tax processing number issued by the IRS to people who are required to file taxes this year, but are not eligible or do not have a social security number. You must still apply for an ITIN. So I recommend checking out the IRS website for that, linked in the Google Docs resources, if any of these two apply to you, because you must have either a social security number or an ITIN to file taxes in the United States. Moving on though, we're going to be talking about who must file and who should file. So when I say who must file, I mean you are legally required to file taxes this year, or you face a penalty and the IRS will be after you. So let's look at a chart that outlines for most people who need to file. Scrolling off the top here. All right, so you can see this chart. For most people who need to file their tax returns this year, this will let you know if you are required to file a tax return this year based on your filing status, your age, and your gross income. So going off this chart, if your filing status is single and you are under the age of 65 at the end of the year, then you have to file a tax return if your gross income is greater than $12,400. Some people might be wondering, okay, then what is gross income? If we look at this double asterisk down here, it says gross income means all income that you received in the forms of money, goods, property, or services that is not exempt from tax. We'll be talking in more detail about taxable and non-taxable income in the next session, but in general, think about gross income as any income that you made this year from your wages or from tips or from other payments. And if you add those all together, that would be your gross income. So if you were single, under the age of 65, and your gross income is less than $12,400, like it is for me, I'm a college student, not making much money, so I definitely have less than $12,400 in gross income, then I am technically not required to file a tax return this year. There are other filing statuses. You see married filing jointly. If both spouses are under the age of 65, their limit for filing tax return is if their gross income is greater than $24,800. So both of their incomes combined, $24,800. And we see here that there's one where your gross income must be greater than just $5, and that is married filing separately. Again, the least advantageous filing status out there. Married filing separately at any age, if you made more than $5 throughout the entire year, you are required to file a tax return by law. So this is a very nice chart that gives you just a basic overview of who must file. There are some other less common scenarios for people who also need a file. They usually deal with like some tax credits that you have to claim or other additional taxes that you paid throughout the year. If you want to look at that, that link is in the resources doc. But this is the main chart for figuring out if you have to file your taxes this year. If we scroll down to the second page, we'll see the chart specifically for children and other dependents. So if you can be claimed as a dependent by your parents or by a guardian, but you still made a good amount of income during the year, let's figure out if you also need to file a tax return. So for single dependents who are under the age of 65 and are not blind, you must file a return if any of the following apply. If your unearned income was over $1,100. So what is unearned income? Scroll down a little bit more. Unearned income includes all taxable income other than earned income, such as the interest that you make on your savings account, or any dividends you have, or any capital gain you made by buying and selling stocks. So if you have more than $1,100 of this unearned income combined, then you would have to file a return as a dependent. Let's say the first one does not apply to you. Then we move on to the second one. Your earned income was over $12,400. You can just consider your earned income to be any wages or salaries or payments that you had physically worked for to earn. So if that amount is more than $12,400, you would also be required to file a tax return. And this third one here is a bit of an odd case. If your gross income is more than the larger $1,100, or your earned income plus $350. This is mostly for some dependents who made a lot of unearned income throughout the year and not that much not that much earned income. Again, gross income is both unearned income and earned income combined. So let's say, for example, that I had around $600 of unearned income and $600 of gross income. Of earned income. So my gross income then would be $1,200, which is larger than $1,100. And my earned income, which is $600 plus $350, would be $950. So then my gross income, so then the $1,100 is larger than my earned income plus $350, which would be $950, like I mentioned earlier. So, and my gross income of $1,200 is larger than $1,100. So I still need to file a tax return this year, even though my earned income was not over $1,000 and my earned income was not over $12,400, because I have a lot of unearned income in relation to my earned income. I would still need to file a tax return. So a little bit of an odd case, but definitely something to look out for if you do have a lot of unearned income as a dependent. So that's for who must file. Now I'm gonna share my screen again for who should file. So even if you are not federally required by law to file a tax return this year because you meet one of the exceptions that we outlined in the previous chart, such as, let's say you're single, you're not a dependent, and you did not make over $12,400. You are not required to file a tax return, but you should still file if any of the following situations apply to you, because you might be able to get some money back that you had paid in taxes throughout the year. And who doesn't love money back? So let's go through a few of these scenarios, and I will answer someone's questions after we're done with this section. So please hold on to that thought. Thank you. Now, the most common situation for people who don't need to file their taxes this year, but who still should, is if you had any income tax at all withheld from your pay or your wages, Social Security, or other income. So for example, on a W-2 or your wages document, if you had any of your wages withheld throughout the year, which you would be able to find in box 2 of the W-2, then you should file a tax return so that you can get this with this income that was withheld back. Let's say, for example, I'm at Duke working as an RA, and they withheld $100 of my wages because they thought I might have to pay income taxes this year. Well, it turns out that I am not required to pay income taxes this year because I did not make over $12,400, but I would still file a tax return so I could get back that $100 that Duke withheld from my RA wages. So this is the most common one here. If you want to get back any of the income or any of the income that was withheld from you throughout the year. Other ones include if you are eligible for refundable credits, such as the child tax credit, the American Opportunity Credit, which is a secondary education credit we'll be talking about later, or if you did not receive an economic impact payment or a stimulus payment that you are eligible for, you can file a tax return and get money back for these credits or get the stimulus check that you did not receive. So those are the two most common ones for who should file. If you have any withholdings or if you have a refundable credit that you are eligible for, you should file so that you can get money back. And again, this chart is on the Google Docs resources, and you can look at the IRS page for other situations where it might be advantageous for you to file so that you can get money back. Now, there was one person who had a question. If you don't mind unmuting yourself and asking your question now. You are able to do that as long as you did not file taxes during that year. So I'm guessing in the 2020 tax year is
So
the
I've
one
never
you're thinking.
filed taxes since starting working in high school. And then this year, like, is my first full-time job post-graduating. So I'm going to file taxes. Because in the past years, my dad's like, oh, if you filed taxes, it's not like you're going to get that much money back. So I was always discouraged from filing. But this year I'm going to do it because I made a lot. So I was wondering, oh, all that money that I never filed for, could I get it back?
Yes, you can. You would just have to file two separate returns, one for the 2020 tax year and one for the 2021 tax year. You are able to go further. There might be a few penalties though if you are filing your 2020 returns in 2021. It's a bit late. So I would definitely look at the IRS webpage and look at like the exact penalty amount because I'm not quite sure what it is off the top of my head, and maybe make your decision based off of that. But if no one else has any questions, that will be all for this session. I try to keep it under an hour. I went a few minutes over, but hopefully that is all right. So thank you guys so much for coming. And I hope to see you guys next week too for our sessions on income and what is considered taxable and non-taxable income. So thank you all again and see you next time.